Awesome. So I believe we are actually recording this session currently. So yes, welcome once again to another episode of Monday Market Matters. As we get ready for the week ahead, a lot of key events that I would like to discuss upon this webinar tonight. So yeah. So like I said, Monday Market Matters, every week I commit to have at least 2 webinars, one on a Sunday so that we get to prepare ahead from Monday to Friday or whatever events that are coming on our way, all right? And right in the middle on Wednesday, I will be having the midweek review. And if it's possible, because the market is going to be real time, it's live, so if there is a possibility, then on the midweek review, we would have a live trade session as well. So even though this on a Sunday, it's called Monday Market Matters because we are getting ready for the week ahead. So this webinar is sponsored by WellTrade. So as usual, given due respect to our sponsors, I would like to actually start off the webinar by just taking about 5 to 10 minutes of your time to actually, present to you what WellTrade has got to offer. So before we begin, as usual, a disclaimer, 70 to 90% of retail investors lose money trading CFDs. So if you know what is CFD, CFD stands for contract for difference. So this is a contract every time that we go into the market and we trade assets like gold, currencies, ETFs, indices, company stocks. So it's also available not only in real units, but also we make it available through this platform. This company makes it available via CFDs. So please consider whether you fully understand how CFD works, and if you can afford, mostly important, like I said, consider that you fully understand how CFD works, and if you can afford the high risk of financial loss, because 70 to 90% of retail investors actually lose their money trading CFD. By the way, it's pretty relative to relatable to every asset class outside there. If you are a trader, if you're an investor, you've got to take it into account when you invest your funds. 70 to 90% of the time, you might make the wrong decision. So only invest what you can afford to lose, and what you make available as a capital or a risk that you're going into the market in order for you to either hedge yourself or going into a profit or even loss, right? So this session for today, like I said, is recorded. So yeah, let me continue. Okay, WellTrade has been around since 2006, so it's about 18 years in the business. Facilitating retail traders to become traders. So we are actually covered in 20 countries at the moment. Roughly about 60,000 traders trade with us, and our funds, when it comes to how we facilitate the withdrawals, we facilitate roughly about 30 minutes to fund withdrawals, right? So, yep, okay, we started in 2006. So far, I can testify that, our support service has been top notch. We provide 24/7 and fast withdrawals every day. And, roughly we have about 40,000 partners worldwide working with us tirelessly in order to give the best that we can to our clients outside there. Okay, and we have won some awards, if you can see, from 2017 until 2003. And some of the promotions that we have a lot of promotions going on. And one of the most key promotions that our clients look forward when they actually trade with WellTrade is the Well Box. So within the Well Box, we have so many. Hello, Ismadi. Hello. I hope you're doing good. So please bear with me as we are recording this. So I would like to continue the presentation ahead. Okay, so as you see, our presentation, the promotions that we have in the Well Box, right? We have got first deposits. If you make first deposits up to $100, you get to claim, right up to total deposits of 1,000. You get to claim up to $200 worth of gifts, but there are certain conditions there. That you have to trade within the lot sizes given. So we have so many promotions under the well box. The moment you achieve it, you get to claim it, right until we even present an iPhone 15 current day, but we're going to be upgrading soon and make the iPhone 16 available to our clients who actually achieve 600 lots. Minimum deposits $500. You achieve 600 lots accumulative within the end of the year. By the first year that within the year that you're traded, you get an iPhone 15. Yeah. And we make available the MT4 and the MT5s. Personally, I prefer MT5 at the moment because MT5, if you were to understand, there's so many benefits trading the MT5. And we have beginner accounts. We have the best choice accounts, the pro accounts, the standard accounts, and right up to an account we call the syntax account, which is really, in my personal opinion, really, really good because it makes available leverages up to 110,000. So if you are somebody that prefers using leverage to the max, so I think so you should give this account a shot. Okay, we also have copy trading for those beginner traders, even advanced traders who sometimes see they're better traders. I personally say, I've been in the not very long in this industry, almost a decade now, more than a decade. But personally, I believe there are better traders than me outside there. So if I find a trader who's consistent, at least for the past 1 or 2 years, consistently making my personal criteria is very simple. Any trader that I find trades between 3% to 5% a month, consistently for the past 1 to 2 years, I think so is relatively a good trader and it's worth looking for. And if you find him, and within our copy trade system, we have many traders like that, by all means, follow them. Yeah. So we have made available the copy trading system. So we also give credit bonuses to traders who come in, okay, up to 100%, particularly for the MT5 accounts, just to give incentive to traders to actually migrate to the MT5 accounts. And for beginner traders, for the first-time traders, we also have something called the welcome bonus. So the welcome bonus starts from $25 deposits right up to $500 deposit, where you don't need to, there are only 4 steps: register the platform, deposit at least $25, double your initial deposits, and all right, because the moment let's say you deposit $25, you get $50 as the amount to trade, and there's no much restrictions. If you trade and you earn, you can withdraw the profits as whenever you prefer. And the good thing about WellTrade is that compared to some other brokerages outside there, a lot, we don't have a restriction on the, how long you need to, keep your positions active. For example, I know certain brokerages, they have a 2-minute waiting rule or 5-minute waiting rule. I know some brokers who have 6 pips waiting, you need to achieve minimum 6 pips before you can actually close the trade and actually withdraw. But in WellTrade, we don't do all that. We are very clear cut. You trade the moment you enter and you close within the next 1 second or 2 seconds. If you're profited, you can actually withdraw the funds. Yeah, that's a good thing about WellTrade. So if you don't have a WellTrade account, at the end of this webinar, ask me within the chat and I'll provide you with the link. Yeah. Okay, so let's come back to our topic of the day. So today we are going to be talking about setting the tone right, because it's the beginning of the month. It's the first week of November. We are going to be looking at what economic outlook, how the economy outlook is within November, and what market implications there are for this particular week with the key events that are coming. So I've actually compiled for you from Monday to Friday what important news or key events that are aligned for that I personally will actually look out for in this particular week, because there are a lot of good events and a lot of key events that will actually create a lot of volatility in the market. So bear with me, and I will share with you in a short while. Yep. So on Monday, as of tomorrow. So if you're trading JPY, please be cautious, because tomorrow is Cultural Day in Japan and the Japanese market is closed. So for the Eurozone in the afternoon, you have got the European zone, especially if I'm not mistaken, France, Germany, and the Eurozone overall. They are actually releasing the manufacturing PMI data for October. The report from France, Germany, and the Eurozone will provide insights into the manufacturing activity in Europe. So let's recap a bit what happened last week. So last week, we know, every beginning of the month, we've got a major news called the NFP, the non-farm payroll. So a lot of data was released on that Friday last week. So we have got the non-farm payroll that really did not do so well. So, forecasted at 107,000 new jobs, but only to realize that there are only 21,000 new jobs created for the month of November. So how does it impact the market? Personally, I say going into Q4, the economy as a whole, not only the US, but in Asia, most parts of Asia, and as well in Europe, it's practically shrinking, right? So, the Federal Reserve, literally in the last Federal Reserve monetary policy meeting, they actually cut interest rates by 50 basis points. And this was followed by, the Eurozone, maintaining so far for not cutting. But I'm very sure, looking forward, going into 2025, they will definitely consider. And when that NFP data came out last week, together with the ISM data, even though the ISM data forecasted was about 46%, but this time came out about 44%. So 44%, literally, it's less than 50%, which is a key indicator of the growth of the market. So anything below 50%, and this is definitely below forecast, which is 44%. For overall, we foresee that the US economy is pretty much shrinking. So if you are trading, how does this impact the portfolios that we are trading? So if you're trading currencies, pretty much last week, the USD was strengthened. I believe it's not so much of the news or the data released, but very much, number one, is due to the geopolitical events that are happening in the US last week and across the world last week, and as well as this week. So last week, the US was actually gearing towards the end of its presidential campaign. So if you know, on Tuesday, US is going to be experiencing the US presidential campaign. The voting is going to be started. So anyway, anytime you have a major event like this, all other data would actually come on hold. So the US, I would not call it a makeup that they're creating, but in any country for that matter, when you are nearby, when you're nearing the election, whatever elections, the major elections, so the market will pretty much do quite well, right? Yeah, good evening, Martin. Thank you for coming on board. So let's continue. So last week we were talking about the NFP. So the NFP data, for my opinion, they don't do so well, but yet USD we find was quite strong. Is because not only that, Israel for whatever matter in the Middle East, with whatever war that is going on, the narrative is positioned in such a way that the West is winning. So the narrative when the West, the narrative that is being painted in the main media that the West is actually winning. So it gives a good positive outlook for the US dollar, because why? They are pretty much supplying most of the weapons in this war in the Middle East, and also in Eastern Europe, in Ukraine, and so forth. So the major economy in the United States, one of the major contributors is war, is sale of weapons. So that is how I believe the US dollar was strengthened last week. Yeah. Okay. Towards the end of the week and towards the end of the month. So moving forward in November, I don't see that happening very much because there are other key factors that we have to consider. Okay. And on Monday, like I said, we have got the Eurozone manufacturing PMI. So coming back to this Eurozone, so when the whole economy, the whole world's economy is pretty much actually shrinking, I believe the PMI in October will show some sort of, mixed data or not so good, in my personal opinion, that will literally give more strength to the US dollar. Okay. And the US, there is data from the US as well, been published tomorrow, which is the factory orders for September. This release may impact the USD by reflecting manufacturing demand in the United States. So on Monday, these are the news that is going to be released. So on Tuesday, okay, we have got the Royal Bank of New Zealand Financial Stability Report. This insights into New Zealand's financial system strength. Okay, so if you're trading currencies like the New Zealand dollar versus the US dollar, anything to do with the New Zealand dollar, so this is the news or financial stability report or the high impact data that you might want to look out for, at least in the Asian market, when this news is released. So, but I believe every other news on Tuesday can, will be put on hold because the biggest news for this particular month and the major key event of the whole year of 2024 is practically on Tuesday, where the US presidential election is going to be taking place. So this is a key event likely to drive volatility in all markets. So Monday, you might not find the markets moving so, giving much volatility. But on Tuesday, the market will start, especially when the US market opens at 9:30 p.m. Malaysian time, or at least the Asian time. So we will see there will be a lot of volatility in the market, especially when you're trading the US dollar or certain commodities like gold or oil. All right. And right after that, on the 6th, the next day, the Asian market will definitely reflect what was, what went on the 5th, where, when the US presidential election took place. So it's definitely going to, give volatility in all the markets, depending on election outcomes and potential policy shifts. So I don't think so much of a policy shift because it's going to be a full day of elections, but the results is definitely going to be, making way for new policy shifts that are coming. If you ask me personally, between Donald Trump and Kamala Harris, whatever rhetorics that they have been painting a picture to their own citizens, personally, I would give it one up for Donald Trump because he's been proven quite, popular overall with his election campaign. Kamala Harris, on the other hand, has a lot of setbacks, literally. So yet to see, at the end of the day, we cannot discount Kamala Harris just because she has not proven to be successful in the presidential election, campaign trail. But never, but anything can happen, man. Anything can happen. Personally, I would prefer Donald Trump coming back because I definitely see lesser of war, even though whatever he says, he did mention in the first presidency as well, but literally when he came in power, there was not even one war that broke out across the world because he brokered everything. Okay. And yeah, the moment Joe Biden took over, the first 100 days, we have literally 2 wars that are going on and continuing until today, right? So history will tell who is the better president in the end of the day. So on Tuesday as well, we have got the US ISM non-manufacturing PMI. So this is the data that that comes from the US services sector. So not from the manufacturing sector, but the services sector. So the services sector, if you can see, in October, literally did quite well. okay, compared to the manufacturing sector. So will it give an impact to the US dollar? Definitely. It most probably will strengthen the US dollar further, and you will see a lot of more corrections, particularly on gold and other major US currency, versus pound, maybe even the Australian dollar, even the euro. Yeah. So this is on a Tuesday. So moving forward, on a Wednesday, we have got the Eurozone Composite and Services PMI, an economic activity indicator for the Eurozone. Quite important. But all this will reflect what election outcomes from the United States, results we ought to get on Wednesday. So also on Wednesday, we have got the US crude oil inventories. So this is the major news for anybody trading oil. Okay, this news impacts directly the oil prices and can affect inflation expectations and the USD. All right. So if the oil prices are lower, okay, if let's say the inventory is higher, that means higher inventories makes lower oil prices, and lower oil prices can stabilize the inflation expectations. But if you have a higher fuel cost, definitely inflation will rise up, and the Feds really need to think what are the next steps, whether to, tighten interest rates or ease a bit further. Because why? On Thursday and Friday, the whole week next week, there are a lot of important news, because on Thursday, we have the Bank of England deciding on the interest rate decision. England is officially technically under recession already. So the BOE stance on rates will impact definitely the GDP, especially with the sign of potential easing. So when I hear words like easing, clearly it's a clear indicator that most probably they might decide to cut interest rates further. Okay, because the BOE, if you know, they have not cut any interest rates since the past interest rate decision that was taken by the United States. And if you know, also, next week, between Thursday and Friday, especially Friday and Saturday, is going to be the next FOMC report. Okay, FOMC interest rate decision by the Federal Reserve. So if you know, normally, the FOMC happens between Thursday and Friday, but this month is going to be happening between Friday and Saturday. So moving forward towards the end of the week and coming towards the third week of the month, most probably we might get gaps throughout the market space. Okay, so beware. If you really take notice of the events and you place your trades correctly, personally, I will not recommend holding any trades going into the weekend next week, because why? FOMC is at 1 o'clock on Saturday morning. Okay, and if they decide to cut interest rates further on Monday, we're going to have a very, very big gap. And trust me, the way the economy is moving, like I said, what we have analyzed over the past few weeks, the economy is shrinking and the NFP did not do so well. So further rate cuts are necessary in order to stabilize the inflation that is going on in the US economy and also worldwide. Okay. All right, moving forward. Okay, on Thursday, we also have the initial jobless claims, labor market strength indicator. So, yeah, personally, I believe there are going to be more jobless claims. So when you have jobless claims, that means there are a lot more people jobless and they're claiming benefits from the United States government. So that will give an impact directly to the US dollar. So a lot more claims, lesser jobs being created, and even weak data that comes out from the NFP. You forecast about 107,000, but you only produce 21,000 worth of jobs. So that paints a very bad picture on yourself. So take keep a lookout for this data that when it comes out on Thursday and on Friday. Wow, Friday is Tuesday and Friday next week is the mother of all events, basically. So the US federal interest rate decision comes out on Friday, and if you look at the calendar, it's at 1 o'clock Malaysian time on Saturday morning. So if you have any positions on that Friday, close it before 1 a.m. because you don't want to go into the weekend knowing that the US has cut interest rates, and on Monday, if you're selling, that's a different thing. Okay, sorry, if you're buying the USD, that's a different thing. But if you're selling USD against the rest, oh, bad news for everybody. Okay, so the Federal Reserve policy outlook is critical, and particularly if inflation concerns persist, right? So inflation is a concern, literally. So inflation is on the rise in the United States because of their relentless, increasing of interest rates. So at this moment, interest is at about 2.8%. So they want to maintain it at 3%. So I believe, they have to make the borrowing cost cheaper for inflation to actually at least stabilize, right? So they have already made the borrowing cost cheaper by 50 base points. I am not surprised if they don't change any interest rate decision. If they maintain it at status quo and there's no interest rate decision, then it will look good on the US dollar moving towards Monday. But yeah, you and I, we don't control the market, so we don't know. Okay. So if I were you, I will not take any decisions, and I'll go into the weekend next week without any position and preparing myself for Wednesday, for the third week of November, that is. Okay, and on Friday as well, we have got the Canadian employment data, reports of employment and unemployment rates. So if you're trading currencies like the Canadian dollar, and Canada is one of the biggest all reserves and also gold reserves on the planet. So if you are trading gold, so you may want to look at your positions as well, because why? Definitely, reports on employment and unemployment rates from the Canadian data would actually reflect the mine workers as well. Okay, the production that comes out from the gold mines. So US as well also is releasing the US Michigan consumer sentiment. So every month on the third week of the month, you will find, if you start with the NFP in the first week of the month, on the second week, most probably every month, you'll have the FOMC report. But this month is the interest rate, is a interest rate decision policy that it's happening. So the FOMC is going to take, the Fed's actually going to look at the rates again, the policy outlook, and see whether do we decrease or do we not change anything, or do we increase interest rates? I do not know. But indirectly, the Michigan consumer sentiment will give a direct clue what consumer sentiment report is going to come out on the third week of November. So if this Michigan consumer sentiment is actually good, so you might forecast that on the coming week, on the third week of November, the consumer reports that are going to be coming out are going to be positive. Okay. So that's it, guys. These are the news that are happening overall, from Monday to Friday. Like I said, keep a lookout. Let's look at some infographics. If I can indulge you, I would just like to share. Let me go into my chart for, hold on. I want to show you the calendar. So let's go onto the calendar and see how the calendars are doing. So I hope you can see the calendar here. So let's recap what we said from Monday to Friday, what news there. So this is one of the news calendars, economic calendars that I use. Personally, I prefer investing.com. But when I started trading many years ago, Forex Factory was one of the easiest ones to go to and to get the latest data. So I don't literally trade the Asian market. So pretty much if you ask me, I don't bother about the Australian dollar much, because I don't trade the Asian market. So my concern is definitely what's happening with the Eurozone, especially with GBP, and what happens when the US market opens. So on Monday, literally not much, but I said, these are high impact and medium impact news. I've filtered the non-impact ones as well, which might give some sort of an impact to the currency as well. But like I said, so I've not, you don't see it here because why? I filtered it out. Okay, but on Tuesday, all this can wait because why? In the night, the whole day, okay, when the US market opens, you have got the press, you have got the presidential elections and the congressional elections going on. And on Wednesday, this particular election results is going to spill over on Wednesday. You've got the construction PMIs that are coming out. You've got the services PMI, you've got the crude oil inventory. On Thursday, like I said, the BOE makes a decision for the monetary interest rate. Okay. And you also have the unemployment claims, jobless claims that comes out. And on Friday, yep, the federal fund rate at 3 a.m. Sorry, my bad. It's 3 a.m. on Friday, not on Saturday. So 3 a.m. on Friday, which is on Thursday. I'm quite surprised because investing.com clearly stated that it's on Saturday morning. I will have to come back to you on this, but I'm just noticing here that Forex Factory is listed at 3 a.m. Okay, federal fund rate. So I might be wrong, but never mind. Whatever said and done, on Friday morning, early morning, or on Saturday early morning, you'll get this data that comes out. Okay, so be very, very careful how you position yourself in the market. Okay, and if you're trading the Canadian dollar, you've got the employment and unemployment change rates that are coming out as well. So pretty much this is what the news that has been offered to us moving into the second week of November next week. So guys, moving forward, let's look into the technical side, which I call the technical analysis and the market signals that might pop out. So I want to share with you my charts over here. Okay, hold on. All right. So I hope you can see my charts, right? Okay. Is my audio quite clear to you? Can you reply in the chat box? Is it clear? Can you hear me out? Clear, right? My voice? So it's clear. Okay, let me continue. Yeah? Right. Cool. So yeah, let's go one by one. Gold. What has gold been doing? So if you see last week, okay. So let's see what gold did last week, yeah? So these are my, okay. Now, if you see last week, price has been on a rise for quite some time, right? The whole year price has been just, doing all-time highs and all-time highs and all-time highs, including last week as well. But literally towards the end of last week, price literally rejected. So when price rejected in a candlestick pattern, this is called a doji, okay? So doji is literally an indecision. The market is undecided whether must it go higher or must there be more correction, okay? So there are a few ways that we can actually look at this, all right? We can actually look at the 52 weeks Fibonacci retracement or Fibonacci retracement and see where the candlesticks are, okay, where the price action is. But personally, if you ask me, I rather use something I call the 4 weeks Fibonacci retracement to see where price has come to, okay? So if at all I see a doji, I literally will go to, on the 4-hour charts and see here, okay, on the 4-hour charts, we clearly have a retracement last week. last week, price did all-time high, and literally now price is rejected. Please don't take notice of the green lines, the blue lines. These are my pivot points for last week, for last Friday. So I just want to take your attention to the price action as a whole. So under the system that I use, my system is divided to 5 different points. It's also a system that I derived from my name. It's called KIRAN, Kiran. Okay. So K is I always look at the cloud, the Kumo cloud. So where did price end up at the end of last week? Price is still above the cloud. So at this moment, price is above price action. If you can see, price did higher high. It has not done a new low. It has only done a retracement, which is a lower high compared to the previous week's low. Okay. So if you see the first 4 weeks, so we take 1 week, 2 weeks, 3 weeks, and 4 weeks. Okay. There is what I do is I will take the Fibonacci retracement tool. I would take the lowest of the earlier of the 4 weeks and pull it right up to the highest of the 4 weeks. Okay. So when I do this, literally price has broken the 23.6 Fibonacci mark. So when I see something like this, what I do is I literally will wait. Okay, just hold on. There's a tool that I need here. All right. So this is a tool. So personally, what I want to see next week, price literally at least retraces. If I can just highlight for you. 1 second. All right. So this is the area that I want to see price actually rejecting. So if it's still bullish, okay, if it's still bullish, this is what price ought to do. All right, if it's still bullish, price ought to reject from here and move higher. Okay. So if the 23.6 Fibonacci has already been broken as of last week, okay, no way it's going to retrace so fast. Because in the past 4 weeks, a 4-week retracement is a strong thing. So literally what has happened is that if you can see if you all follow a chart pattern, this is literally what I call, what do you see here? What chart pattern has been created? Can you share with me? Anybody trading chart pattern? Obviously, I don't have any rewards for you at the moment, but I'll soon, the next few, and I'm suggesting to the company that, if we could have some sort of a reward kind of a system where if the audience actually answer, we give them a certain price, right? But I don't have any price. I'll just clap, because why? If you're quite aware, if you've been trading quite some time, you know possibly what price action has been coming up. So in your opinion, what price action is this? I'm not a chart pattern guy. No problem. Okay, let me tell you. So under chart pattern, rejected. So what do you see here? If it's rejected, this is clearly a head and shoulder pattern. So head and shoulder pattern indicates, okay, how do I know? Do I use head and shoulder? Don't ask, because why? I'm familiar with every single knowledge that is outside there. I'm literally a you know, encyclopedia walking around, when it comes to trading. So I pretty much use everything that I find will suit me in that particular time for me to trade. So I use Fibonacci, I use the Ichimoku, I use moving averages so that I can get the best possible means in order for me to go into the market. Yet sometimes I do not make a profit. It happens. It's human emotions, but it's how you manage your stop loss, it's how you manage your risks that determine how far you're going to go into this field called trading. All right. So I know one thing. Okay, the higher the time frame, the lesser the noise that is in the market. So clearly, at the H4 time frame, at the 4-hour time frame, price has already rejected or I've already broken into the 23.6 Fibonacci, and now it's testing. It will test definitely. By next week, it will test the 32.8. If the US presidential election is so strong, it will even decide to test the 50 zone and also the 61.8 zone. So what do you see between the 50, the 32 zone, 32.8 and the 60 zone? Okay, all these three zones have something in common. All these three zones, this 32.8, let me just okay. This zone here and this zone here and this zone here has got something in common. All these three zones are witnessing the 100 moving average and also the 200 moving average intertwining among one of them. Every single one of them. And if you know about moving averages, you clearly know this is a very, very strong moving average. Even the banks use them as an indicator of a dynamic support and resistance. So you've got a clear resistance, a clear support at the 100 moving average, and also a clear support at the 200 moving average. So any rejection between the 38.2 moving average and the 50 moving average, any rejection and a possible engulfing, okay, can be considered a good entry point for a buy signal for gold. Okay, so I personally want to see price rejecting here or here, moving upwards. That's the only way to go. Okay, how far it's going to retrace, hopefully it might retrace towards okay, towards the resistance of the cloud. Okay, the cloud, if you notice, is following the moving average as well. That is why I like the Kumo cloud, the K, which is the Kumo, because the Kumo X is literally as a dynamic support and resistance as well. At this moment, price is at support. Okay, whether it rejects, it depends. Okay, and if it goes further, I want to see price rejecting at 50 and moving higher. So the Kumo tells me price is above the cloud. The I tells me, okay, price, it's indicating, all right, that it's above the moving average. And sorry, all I understand about moving average, that cross and golden cross. Yeah, no problem. Okay, if you understand that cross and golden cross is because these are the crosses that determine whether price, okay, that when you have a death cross or a golden cross, that's an indicator of the price turning the trend or reversing the trend. But reversal of trend must be supported by something else. Why a lot of us get false signals even at death cross and golden cross is because we believe 100% that if there's that cross happening, then price is definitely going to reverse. Or golden cross happening, then price is definitely going to reverse. But it doesn't fall that way, correct or not? Okay, there are a lot more other things. So the more confirmations you have in your analysis, the better your chances going into the market. And like I said last week, not going into the market is also a strategy of trading, guys. Okay, be very flexible with this. I hope you understand. So the eye tells me, okay, the eye indicates I have to react to the moving averages. Okay, so clearly now price, I have to wait whether the moving averages will reject or not, like I said. Okay, and I have to navigate from there. KIRAN, I have to navigate. The N is for navigate. What is my next course of action? So if I get K, price is above Kumo, I indicate and react towards the price using the Fibonacci retracement. Okay, the retracement, right? And A, I also hopefully want to see price rejects above the moving average. So how many confirmations there? 1, 2, 3, 4. Okay, and 5. I need to navigate. I need to make a decision. Okay, whether should I enter with a buy, what is that? Buy entry or sell entry. But 4 hours is very, very long time, correct? Because next week, from Monday to Friday, we have so many 4-hour candles. So even though we have, on top of that, we have smaller time frames like 30 minutes. Okay, we also have 5 minutes. So the 5 minutes is much more of a, if you ask me, if you look at the 5 minutes, where is the direction? So if you really look at the 5 minutes, clearly price has broken into 23.6. Now I'm hoping that it will move further and retest and test 38.2. Okay, so I use 5 minutes just as a confirmation whether I can enter the market or not. But majority of the decision making comes at the 4-hour charts. So I hope it's clear. So this is my recommendation. If I were you, I will not trade gold for the moment. I will see how price reacts towards 38.2 and 50% moving average. That is for gold. So moving into GU, last week, okay. Sorry, the charts are actually loading. So if you trade MT5, you must understand MT5 charts are stored real time. So they are not like MT4. MT4 is literally price. They are storing the charts on a particular server that is not real time. So MT5, literally the mechanism is different. So loading of charts might take a bit longer during the weekend. Okay, so if you notice, but nevertheless, no problem. If you really look at it, okay, all right. While the charts are actually loaded, let's go for daily. Easier. So we know daily price is clearly on a, if you clearly see now, okay, now let's look at the 4 weeks, right? What has happened the past 4 weeks? So the past 4 weeks, price has literally, like you said, Mr. Ismadi. Now, this is what you were mentioning. This is what you call the dead cross, right? So the dead cross clearly happened on roughly about 2.5 weeks ago. So 2.5 weeks ago, for the GBP USD, the dead cross happened. So officially, the GBP is weaker than the US dollar at the moment. So when we say weaker, how weak? If there is a retracement to have a sell position, where must we put the sell position? So first thing first, my system, I refer back to K. K means Kumo. Kumo at the moment, price is below the Kumo, is officially bearish. Okay, the bears are officially in charge. Oh, where is my chart? All right, anyway. Okay, so next thing I will indicate and I will react using the Fibonacci retracement up to 4 weeks. 1, 2, 3, 4. So the 4 weeks chart, let's say the higher of the 4 weeks towards the lower of the 4 weeks. Okay. It doesn't need to be perfect. It's just an indicator, just a preparatory, doesn't need to be perfect. That's what I mean. Okay. So, okay. So on this point, I clearly can see, okay, on this point, I clearly can see, number one, price, right. Okay. Oh, sorry. This was the highest. Okay, on the fourth week, on the first week. All right. So price literally on within these 4 weeks have already tested 61.8. The dead cross has confirmed the bearish and price has already tested. So where does it go from here? So this is the most beautiful part. So if I am right, next week, so when there's a retracement, there's also an extension. So I normally what I do is I extend my Fibonacci. So this is how I use my Fibonacci. I do extensions. I not only know how to do retracement, but it's also important how to take an extension. So kita nak tahu. So when we enter, where do we take profit? Let's say we enter, and let's say this is our stop loss. Above this area is our stop loss. Okay. And this is where we take, let's say next week, moving into next week, okay, the US dollar might be strong. We take sell for an entry. So I want to see price ending up here at the first point, 161.8. And at the second point, 261.8. So this is where I see price moving. So this is how you use the Fibonacci. So clearly, I know 61.8 has been tested. I know 38.2 has been tested again. So price now will not look back from Monday onwards. Price will move further south. Okay. And this is where price is heading. I will reconfirm back again. I will do the Fibonacci, the pivot price calculations again, and I will share it within the group tomorrow when I officially do the daily intraday outlook. Okay. So for GBP, this is how I see. So yeah, we only did 2 charts. I am in the mood to do another chart before we end at 10 o'clock. So I don't want to take much of your time. Is there any other chart that you want me to analyze? Please, you can actually tell me on the chat box. Any other charts that you want me to analyze? Crude oil. All right, crude oil. Okay. Apart from crude oil, any other charts? Let's take one more. None, huh? Okay. So let's do crude oil. Let's see whether do I have crude oil here. Okay, I want to see my market watch. Okay. US oil. Hold on. Then we go to symbols for export metal. Oh, I'm so sorry because why? This is a prop trading account that I'm trading. So they don't make available oil, but never mind. I will do you that favor. Okay. Let me bring up another chart that we can actually do the same thing and we go for oil. Just hold on, give me a minute. Let me see what I can do for you. Only trade crude oil and gold, no problem. Okay, so I will do you that favor. Let me stop charts for a while. Let me bring up my crude oil. Okay. 1 second. Bear with me just one moment. I'm actually okay. Indices, options, oil. Crude oil futures. Moment. Crude oil, WTI. Okay, I've got the charts. One moment. Oops. Okay, team. I've got, all right. So this is the crude oil chart that I have. Okay. Hopefully it is something that what you see within your charts, right? So this is a trading view chart that I've got for you. Now, similar, any chart for the matter, it is quite similar how we do things, right? So if you see, let me get the period separator, right? Settings, trading cycles, events, alerts, default. Session breaks. Okay, economic events. I don't want this at the moment. Key facts today, news, done. All right. Okay. So what crude oil did last week? Restore. Okay, reset chart. Okay, last week, if you see, over the past few weeks, the price has pretty much been stable. It's on a sideways. Okay, sideways so much so that price literally last week had a rejection, but price increased. In your personal opinion, you said price increase. Okay. But does this chart resemble the chart that you trade? J. Madi? Is it the same as the chart as you trade? It's the same, right? All right, no problem. Okay. So let me do an analysis first, yeah? Okay, at this moment, if you can see, price, this was the lowest that price went. This was pretty much a glitch between March, and the pandemic and moving into, yeah, quite same, okay? So price went from lowest to highest in 2022, literally stabilized in 2023, and price pretty much is on a sideway. So when you see a sideway like this, price, in my personal opinion, price is planning something major. Okay. Oops, sorry. Now, there are only two ways from here. Price is consolidating in this channel here, and most probably might move further low. Okay. If price moves lower, and definitely the next target would be either this support over here or this support over here. Okay, there are two supports moving into. Okay, but I doubt price is actually going to move lower. It might even move higher back. But nevertheless, this is the weekly. So the weekly has not got much of noise, right? So the price is pretty much certain. Okay, price increased last week is because there has been a rejection on the weekly. So the weekly rejection, even though it has rejected, the sellers are still in control. Look here. Even though there has been a price rejection, sellers are still in control at the end of the day. There are a lot more sellers up there. So whether will price move lower, we yet to see. Anyway, okay. Oops, sorry. Okay. Anyway, let's go at the 4-hour. Okay, and see within the past few weeks what has happened, right? So the past few weeks, so we have 1, 2, 3, and 4. So this is the price action for the past few weeks. Okay, 1, 2, 3, 4. So I want to take your attention from this angle, 1, 2, 3, 4. Okay. So this is where price started, and this is where price has ended at the moment. Okay, no problem. So now, taking the Fibonacci retracement, we clearly know at a smaller time frame, okay, at a smaller time frame, price has increased, right? You said price increased, okay, over the past 4 weeks, but literally price last week made a retracement. So within this phase here, within this increase, what is the percentage of retracement that is what matters to me the most, okay? So I take the retracement tool, I pull from the lowest point towards the highest point. Sorry lah. Let's see how it is. White in color. Okay. So literally now, price is at between the 38.2 moving average. Sorry, 38.2 Fibonacci, and as well the 50 moving average. So if I were you, I will add another confirmation. So what are my confirmations? I will add an indicator. So what I'll see is I will, hold on, let me see what indicators can I include, right? Favorite indicator. Where are the indicator templates? Correct. For indicators, moving average. Moving average one. Things. I'm so sorry. I'm trying to find the indicator, but I can't see it here. Why is it? Did I do anything wrong? Am I looking at the wrong thing? Okay, favorite indicator. Okay, cool. So just simple moving average is how I make my decision easier. I look at the moving average. Okay. So even though it's at EMA 9, I will go into the settings. I will change it to, sorry, these are the chart setting. Added EMA, okay, settings. Okay. Then styling. All right. Then line steps. Okay, everything else is perfect. No need to be fancy. Okay, so we know price now is below the 100 moving average. So, but where is the 200 moving average? Again, moving average, exponential. I'll go into 200. Pretty much. So this one, I'll turn it to white. I'll put it a bit more thicker than the usual. Okay. So you clearly can see from here, okay, price has already officially is below the moving average. So when price is below the moving average, clearly you want to know, okay, if I am going to sell, okay, where shall I sell? Or where must the rejection be? So you know price has already been rejecting, right? Okay, so clearly here, okay, at this junction, if you look at daily, okay, if you look at daily, clearly there was a dead cross daily, price is reducing, and at the 4-hour, clearly price is moving lower. So if I were to see it at a glance, price is already thinking of breaking the 61.8, but yet we have to see. So to confirm the breakout, okay, on a 30 minutes chart, right? Okay, let me give you all this. This is how price will move. At any given time when price moves. All right. I want to take your attention here. Hold on. Where is my arrow? Trend line, my arrow. Okay, Fib. Okay, never mind. Sorry. Okay. So however price is never going to be stationary, right? So when it retraces, let's say it breaks further down, it doesn't matter whether it goes further down here, okay? And from here, it goes further down also, it doesn't matter. But anyhow, let's say if it rejects at 61.8, right? If it rejects here, price will definitely retest the previous resistance. And if it rejects, then only I can say from here, it will go further down. Okay, so it's how you react. If you ask me, this is the price action that there is. In oil, if I were you, I will not take any trades at the moment because price is on a 30 minutes, price is actually on the 200 moving average. A 200 moving average, whether it's 4-hour charts, whether it's 30 minutes chart, whether it's 5 minutes chart, you must understand this is a strong support. So if price rejects this strong support, then what do I do next? Because my 4-hour clearly indicates that price is bearish, I will look at selling on a higher time frame, which is at
H4?
Yeah,
H4? Or
no, 30 minutes. H4 clearly, kalau kita tengok, H4 clearly states that price is below moving average. Price is below 200 moving average. So the trend is the price is clearly below moving average 200. So price is clearly bearish. Price is not bullish.
okay, so means if the price is under the MA 200, so we should switch to lower time frame to determine our next step.
Yes.
I mean,
Yes, switch to lower time frame and see how the price is reacting to the 200 moving average. If the price reject this 200 moving average, don't buy first. Wait here. Wait where? Wait here. Wait at this angle here. Because you want to see how price rejects from here. If price rejects this resistance, then you can sell again from here. Nampak? That is the best way to do. Because if you sell now and price moves higher, there is no indicator that price will sell further because you know why? The price is between 38.2 and 50 Fibonacci. If I were you, I will wait for the price reacting in this angle here or the price reacting at Fibonacci 61.8. Even though price reacts. So the key, that's why guys, with the analysis you do, with the confirmations you get, okay, at the end of the day, doesn't give us a license to actually enter the market immediately. It gives us a strategy to say, where do I wait? What is the best price for me to take my action, whether it's buy or sell. But all this buy and sell comes with a confirmation where price action is at the moment. Whether price is below the moving average or price is above the moving average. You see here, I've not used the Ichimoku. I've not used the cloud. Why? Because at this moment, okay, my cloud indicator is the moving average. The moving average clearly indicates that price has rejected. Price has already done the dead cross and price has already done the dead cross, went below. Have you noticed something? Price did the dead cross, broke the support, went lower, but there must be a confirmation, correct or not? Correct or not? Like I said, where do you sell again? The confirmation was here. So for you to sell again, you cannot sell on higher time frame because why? Modal kita tak besar. So you have to go into the smaller time frame, lower time frame, and find a better price action for you to sell. So you know now at the better price action, price is increasing, correct? Price increase doesn't mean price is buying because the higher time frame always rule. Okay, so now you know at the 4 weeks Fibonacci, price has been increasing and is already at the 4-hour Fibonacci, 4-hour time frame, price has rejected the moving average. So price has rejected the moving average. So I must find where the best price for me to sell. So first, price must reject the 200 moving average at the smaller time frame and retest this area. If it rejects further, ada engulfing sell, baru saya sell further straight down here. Simple analysis. Nampak?
Okay, coach. One question. Late line? No, I mean the moving average 200 and 100.
Yeah.
Okay, they say the price are going to test to the higher resistance. I mean,
Yeah.
Yes. So, in short way, can we take this opportunity to make it stand by until to the resistance, and then when the price reach at the resistance, we can directly go sell.
Okay, I understand. Okay.
Yes.
I understand your question. What you're trying to say is that, okay, what you're trying to say, so while waiting for me to sell at the higher time frame, can I buy at the lower time frame until it reach the resistance, correct or not?
Yes.
Okay.
Because I can see we can take this opportunity.
I understand. Okay. It's the answer to your question is there's no right or wrong. If you take the opportunity to buy, okay, if you take the opportunity to buy, it all depends how much you're willing to risk. If your stop loss, if I were you, I will buy and I will have a small stop loss. Where must my stop loss be? Okay, let's look at the price action again. My stop loss ideally will be here. If I buy, let's say price in these grounds rejects here. This is a very good ground to reject because why not here? I don't see this is a good ground. Okay, frankly speaking, if price goes at 61.8, clearly it will reject. Clearly it will not reject. It will go higher. Okay, this is the best part. This is the best point for price to reject in the coming days. Okay, price rejects this angle, I will take, and where must my stop loss be? My stop loss must be down here. My stop loss will be here. One level below. Okay, so there is where I must buy. But let's say if price, okay, another angle, where do I see a buy? Anything above the 100 moving average is a good sign of buying. Nampak?
Oh yeah. Because above the moving average is considered buying and bullish. Lower than that,
oh no. Yes, lower than these two, you have to see the reaction. Lower than these two, you have to see the reaction. That's why I said, because why? Why am I so concerned here? Because on a bigger time frame, price is clearly rejected the 200 moving average and it's below both moving average. Nampak?
So all this time I thought it wrong because I thought anything above is can consider of buying.
Okay.
Lower than yes, and lower we can go to sell.
I understand. I understand where you come from. Because that's why I said, a lot of people, they think trading is as simple as what you see and what you get. It's not that simple. You have to have filter. That is why they give you so many indicators, right? Yet people still lose, correct? Even I lose money. So that is why I said, to answer your question, whether can I buy? Can. Please go ahead, buy. But what is the condition of buying? Number one, price must be above moving average. Number two, you must limit your risk. Why I say limit your risk? Sorry, again?
To limit the risk, I can understand that maybe can utilize small lot,
Exactly.
smaller lot.
Exactly.
Okay.
Exactly.
Okay.
Utilize smaller lot. Okay. So if any reaction and price hit the stop loss, most important thing kena ada stop loss, guys. If you don't have, that's why I said, I get my stop loss hit all the time. But why do I not get frustrated? Because well, I know my risk. I know if I come back to the market, I'm better prepared. Correct or not?
Yes.
Exactly. There are so many people who question my stop loss method. They say, oh coach, why do you need stop loss? Kalau kita trader bagus, why do you need stop loss? I said, I'm not a good trader. That's why I need stop loss. And if you think you are a good trader, you know yourself lah better how good you are. Because good, even the banks don't tell people that they are good traders. The most important thing is to take limited risk. Paling penting. So that you can last yourself in this market for a very, very long time. Understand, guys? This has been a very, very good session, and I'll put it on my YouTube. All right? So please review this session again and come back. Please, if you have friends who are traders, I recommend them to come back to our midweek review, to come back our market matters, because this is where we learn to get ourselves better prepared.
Yes.
All right. So guys,
right.
I do not want to wait. Take much of your time. It's still the weekend. Okay.
Oh, sorry, coach.
Go ahead. No problem. I don't know. I am okay. I'm most probably doing more research after this as well. So it's your weekend. Okay, I appreciate your time. Thank you so much for being in this webinar with me. Right? I'll
Thank you.
Yeah. So I'll end this webinar by saying thank you, and I hope to see you in the groups. I'll share my analysis in time to come tomorrow. And we will see in the next webinar on Wednesday, which is the midweek review. So with that, Coach Kiran signing out. Take care. Bye-bye.
Okay. Thank you, coach.
Bye.